Hello and a very warm welcome to our first episode of Money Side Up, the podcast for Australians all over the world, including back in Australia. It's the first for 2025. And of course, joining me as he regularly does down in Perth at the moment, Joel Kerin. G'day, Joel. How are we?
Oh, look, it's good to be back. 2025 is already starting with a bang. So it's so many things happening. So it's actually really good to be back. And although I'm still a bit sad from my whole post-holiday blues in Hong Kong. So, but we're good. We're good.
And like it always does, I always find that Christmas break just disappears faster and faster. I don't know if it's because I'm getting older or family things just tend to occupy that time, but it just seemed to come and go and we're straight into 2025 like nothing happened.
Like it, yeah, exactly. Like it didn't even happen in the first place.
Mm. And you spent a bit of time in Hong Kong, Macau, I understand. How was the trip?
I did. Hong Kong and Macau was honestly, it was a really good trip. I went in there obviously with I tried to start with a bit of a no blinkers on. I wanted to see it for what it was. I've had a lot of expat clients and a lot of other people that just have come in saying that Hong Kong has changed, particularly since sort of the events that sort of unfolded in 2019, 2020 and post-COVID worlds. They were just sort of highlighting that Hong Kong and Macau is different now. And there's really no denying that it is different, but it is still alive. It is still a very vibrant city. There is a lot of the places and stuff that I got to see were just all very new. And so that's really good. Post sort of 2022, like a lot of the really nice bars and restaurants that I went to, have really popped up post COVID. So it's nearly as if Hong Kong is back open for business. It is alive and well and ready to party, basically.
Fantastic. Very good to hear. And I mean, I'm sure Hong Kong, wouldn't like to be losing to Singapore in terms of, being attractive for business and expats and all the rest of it. And now I think that the Middle East region is, attracting a lot more businesses and expats in general as another destination. So I think a lot of the Hong Kong business associations we're hearing are certainly throwing a lot of money and support to try and encourage more businesses to come in. So look, really great to hear. I spend my Christmas down in Australia, so nowhere quite as exotic, but nice to see the family, obviously, and spend a bit of time in Australia over the Christmas break. But look, I'm sure our guests, our community, our listeners don't want to just hear about our holidays, so we might dive straight in. Maybe before we do you want to cover off our disclaimer, keep our legal team happy?
Of course. So obviously everything we discuss in the podcast, it's designed to be general in nature. So any sort of advice or, information that we're providing, assume it as very general advice. And so it's just really important that if you do want personal financial advice, please reach out to Jarrad or myself, and we will be happy to take you through that personal advice route, just to make sure that anything we do discuss is personally appropriate for you.
Brilliant. Well, look, I guess kicking off 2025, so we're recording this at the start of January 2025. So just to give a bit of context, so I thought it'd be probably good to start, I guess. Let's have a look at what happened throughout calendar year 2024. It did feel a little bit like we were still sort of coming off that rebound or the nosedive, if you like, of 2022. Wasn't really a lot of safe places to hide. I think cash was about the only asset class that actually went up in 2022. But I mean, looking, across the globe, if we just sort of look at the high level indices of what happened and what played out throughout 2024 calendar year, we had the MSCI World, excluding Australia, up about 21%. So a pretty strong year for global equities. We had the S&P 500 up about 27%. Now, a lot of that was obviously driven by a lot of those technology players, by Nvidia, Alphabet, Amazon, Apple, etc. And that has started on a fairly positive note throughout 2025 already as well. The Aussie market did fairly well. We're up about between 16 and 18%, depending on whether you look at the more commodities weighted and heavy sort of indices. Bit of softness in China's economic story meant that the broader Australian index was softer than the United States, and that's kind of to be expected. Our overweight nature to the banks and to commodities in general created a bit of softness there. Chinese equities had a pretty good run. on the back of a fairly dismal, I'd say almost decade prior to that, particularly those technology players, I guess, in that space. European equities, again, relatively strong run. Japan also looking fairly positive throughout 2024. Bonds were pretty flat. I think 2024 and Joel, I'm sure you can outline on the ground in Australia. It sort of felt like a year where nobody really had a clue where rates were going to go. We started the year,
Absolutely.
they were going to go down, then they were going to go up, then they're going to go nowhere, and then we're going to kick the can down the road. I mean, geez, if you were trying to buy a property or refinance or fix or variable, there was a lot of noise through 2024.
It's definitely been a talking point. I think broadly, Australian housing has been a focus point, particularly since, the 2020 COVID pandemic. And, we've had, sharp rises in property prices basically in most major capital cities across the country. And now obviously that interest rate sting really started to bite back throughout, the later half of 2023 and 2024. So it's just been this sort of a lot of people and a lot of conversations that I have, particularly in Australia. It's like, when is it going back to 1.79%? And it's sort of like, well, probably never. But you know, there might be some relief coming, particularly in 2025 over the next sort of 6 months. Inflation has, it's sort of definitely slowed, particularly in Australia. So it's a matter of time when the RBA decide that that monetary easing is due, and I'd say the economy will start to flourish a little bit more
Mm.
as a part of that, particularly. Yeah, hopefully without driving any much more unnecessary inflation.
Absolutely. And you mentioned Aussie property prices. I mean, probably worth just touching on, what happened through, again, calendar year 2024 to give everyone a bit of a snapshot. You see a lot of noise, a lot of headlines, but at the end of the day, the data is really what we want to look at and what tells the story. As most may be aware, Perth absolutely shot the lights out, and another very, very strong year. Perth property prices across the city were up a little over 19% for the calendar year. Following that was actually Adelaide. So coming off an extremely low base, we had a number of clients buying property in Adelaide back in 2021, 22. And really that was a story of just playing catch up. The affordability of property in Adelaide was really quite standout. So Adelaide property prices were up a little over 13%. It's not a market that's often sort of viewed or seen as an attractive investment destination, just given median age, economic growth, economic drivers in the city or in the state of South Australia are not quite as diversified or as strong as, say, a Melbourne, Sydney, Brisbane, and even Perth, but did have a very good run. We then had Brisbane. So Brisbane was up a little over 11%, so 11.2% for the year. Obviously, all eyes on the Olympics, a lot of infrastructure in Brisbane. Queensland's probably one of the more efficient state governments in terms of meeting deadlines and actually delivering on promises that are rolled out. The train line expansion, the public transport expansion in general, various highways, motorways, upgrades, the sort of entire stretch between the Sunshine Coast, Gold Coast, Brisbane is just getting more and more advanced. And I think that's really going to continue. We spent a bit of time in the Sunshine Coast back in, when was it, October? Let's say late 2024. The advancement there is just phenomenal. The development, the number of properties. So again, pretty easy to see that story sort of continue to play out. Outside of those three, Sydney prices were not quite as standout as they have been. So Sydney across the board was only up a little over 2% for the year, so about 2.3. Again, no real surprise there, just given the very strong run we've already seen. Melbourne, which sort of, I guess, came as a little bit of a surprise, but not when you actually look at why and what drove it. But Melbourne property was actually down 3% for the year. The Victorian state government was arguably the worst run sort of state or entity, if you like, ever since COVID. The spending was just frivolous, very, very poorly financially managed. We had all of the international students completely vanish throughout COVID. And when you've got those inner city postcodes Docklands, South Bank, inner city Melbourne, where about 56% of occupancy is international students. That is an absolute ghost town. And then on the back of that, we had the land tax-free threshold reduced down to $50,000. So if you had one of those little studio, one bed, even two better apartments in inner city Melbourne, and, first you thought, yeah, great, we've survived the international student disappearance. They're all coming back. Then you got hit with a land tax bill. So death by 1,000 cuts. And then they decided to change some of the tenancy laws as well. Now, not really anything that was terribly draconian in that, but it was just yet another negative headline. So we're actually starting to look at Melbourne as a pretty healthy investment destination, given where property prices stand at the moment. Obviously, seek advice if that is something you are looking at. But just interesting to see that divergence, I think, between Melbourne and Sydney. And then the rest, Hobart was down slightly. Looking at some of the other capitals, Canberra was also down slightly. We'll head into an Australian election in the not too distant future. And whoever is in charge does tend to have a bit of an impact on Aussie property prices. But yes, I guess, Joel, one of the other big things that we did see play out throughout calendar year 2024, and I guess, as we sort of enter 2025, is the Aussie dollar.
Yeah, absolutely. And it's, and probably on the back of that, the Aussie dollar has had a bit of a shocking run. It's, great for our expat listeners that are obviously earning in other currencies, but, for me traveling, earning Australian dollars and then traveling around the world, it plays a bit of a different story. But yeah, like I suppose at the moment, what is it, about $1.18 Sing dollars, Aussie dollars to the Sing dollar. So, that's, for if you're earning in Sing dollars, there's lots of opportunities there, particularly for an immediate 17-18% uplift. The Hong Kong dollar, we've seen that again drop below 5 Hong Kong dollars to the 1 Aussie. So again, there's plenty of opportunities for the expat community to really consider, if you are purchasing property in Australia, topping up super contributions, investments in Australia. If your future domicile currency is going to be Australian dollars, then it's obviously very timely to be prudent about, when to exchange that. And, with a soft Aussie dollar, particularly at the moment, that tells a pretty promising story. But yeah, so a lot of that soft Aussie dollar, again, driven by the weak demand from commodities as well. So that's obviously pegged a lot of talk, particularly as within the ASX and the ASX 200 as well, which is, what we discussed earlier.
Mm.
Yeah.
Absolutely. I think it's one of those things, we get asked all the time, as I'm sure you do, is this the top? Is this the time? At the end of the day, there are really three groups of people, those that are really sort of watching, taking advantage, as you say, buying property, topping up super, contribute to the repatriation fund, top up the offset, whatever it is, just taking advantage of the low Aussie dollar. You've then got those that are waiting, and in a year or two or three or five, regret they did nothing. And then you probably got those that'll look back in 5 years' time and think, what on earth happened? Just not paying any attention at all to the opportunities in front of them. So at the end of the day, if we look at what we're doing personally, as somebody who does sit here in Singapore earning Singapore dollars, as an Australian with investments back in Australia, naturally taking advantage of these rates, whether it's 115 or, as you say, 118, you get to 120, fantastic, we'll do some more. At the end of the day, I think looking at where it's been historically is a fool's game. Assuming that it owes you anything, again, is exactly that. So all we can really do is take advantage of the opportunities, as they currently stand.
Absolutely.
Well, look, on that note, we might dive straight into our guest speaker today. We've got a fantastic guest speaker to sort of kick off 2025. Having a lot of conversations with people in Australia late last year throughout Q4 and already this year who are looking to move to Singapore. And one of the common questions we get asked is, how do I start a business in Singapore? So what does that look like? How do I get a visa? How do I set it up? What are the tax incentives? And there are plenty in Singapore. It's one of the, I guess, certainly from a personal opinion standpoint, one of the things I love about Singapore. It's incredibly pro-business. And I think some of the grants, the incentives, the tax benefits, the tax deductions, the tax rates, all of these things that we're going to hear from our guest today will really emphasize that point. So we'll dive straight into our interview with Vijay, a good friend of ours. We've known him for a very long time, and see what he's got to share with us. Well, a huge thank you for staying tuned on the podcast today. We've got a fantastic guest, Vijay, joining us. I'll tell you a little bit about him shortly. But Vijay, first and foremost, huge thank you for giving us your time today.
Most welcome. Happy to be along for the ride.
Wonderful. Now, Vijay is based with me here in Singapore. I've known Vijay for, I want to say, maybe 10 years. It's been a little while. Vijay is a licensed company secretary here in Singapore. He runs and owns his own firm, Integrity Corporate Services. All things starting a business, running a business, compliance for businesses in Singapore, Vijay is the go-to person. So absolute expert in this space, been running and operating here for 20 odd years, longer than I've been in Singapore. So really thrilled to have him join us today. Lots of things we're really going to unpack and dive into, but really what we want the value to be for our listeners, for our community, is really to answer some of the things around, what if you're coming to Singapore to start your own business? What if you're expanding an Australian business into Asia? How do all of the visas work? If you're already in Singapore, what can you do? There's a lot to unpack. There's a lot of garbage online. So we're going to dive straight into some of these questions. So Vijay, let's start with the basics if we can. Maybe step us through, what does it actually look like to set up a company here in Singapore?
All right, very good. So it's not as complicated a process as a lot of people think, or not as complicated a process that people make it out to be. It's as simple as approaching the authorities. In our case, it would be ACRA, the Accounting and Corporate Regulatory Authority of Singapore. It's an online platform. You register a name. Once the name is approved, you submit your application and wait for it to get approved. And because it's all an online process, in theory, it can be done immediately on the spot. And of course, there's some fees to be paid online, but the very, very small figure. There could be, so most cases I would say would get approved on the spot, unless at the point in time when you want to reserve your name, the ACRA's online system flags it out that there's another organization with the same or similar name, and then they either request you to submit an appeal, which then routes the whole process through a physical officer, or they ask you to change the name to something else. Now, when you do the actual submission itself, once the name is approved, I would say greatly 95% of the time, it's all done electronically and it's approved on the spot. If the computer system, if the algorithms, the AI or anything behind it were to flag a person or flag anything in the information that they feel that a person physically should take a look at, and they will tell you at that point in time that this has been referred for manual processing. So when it does get referred to manual processing, then it could take some time. So the ACRA website says it could take up to 2 months. But in most cases, to be honest, they're very efficient. You can expect a reply with some follow-up questions seeking clarity. And about maybe a couple of weeks, it should get solved. So not a complicated process, not an expensive process. It's a process that actually, if you are a Singaporean or if you are a Singaporean permanent resident already, then you can actually, technically speaking, do it yourself because you have the online access. For a person who is not a Singaporean or a Singaporean permanent resident, then you need to engage a licensed company secretary to be able to submit on your behalf, because you require a password called SIGPass, which is an automatic or national password system, which is given to Singaporeans or Singaporean PRs. So yeah, if you are not a Singaporean or a Singaporean PR, you need to engage a third party who is licensed to be able to access the system to do it for you. But most of the time, even when you do that, it's quick and fast and it should be on the spot.
Brilliant. Sounds very straightforward, very efficient, very Singapore. Maybe step us through some of the structures. If we look at the Australian system, we have sole traders, partnerships, company structures. What are the options in Singapore? Are they the same? Are they different? Are they more restrictive, more expansive? What do the options look like?
Well, Jarrad, there are a couple of options in Singapore which are largely similar actually to the different options that we have in Australia. But bearing in mind that the audience of our podcast are mainly Australians who are either in Singapore already or who are based overseas, let's focus on the company structures that are available to this group of people. So there are sole traders. Non-Singaporeans or non-PRs are not eligible to be sole traders. There are partnerships. So there are two kinds of partnerships: limited partnerships, LLPs, basically limited liability partnerships, and normal traditional conventional partnerships. So non-locals can be one of the partners in an LLP. Of course, the other partners will need at least one person to be a Singaporean or a Singaporean resident. Then, of course, you've got private and public companies, similar to Australia. And you have companies limited by guarantee for companies that are not requiring dividends to be issued. So for most expats or for most people who are not from Singapore who want to register and do something in Singapore, the most common structure that they use would be a private limited company. Now, some do use LLPs, but LLPs, the main difference between that and a company is personal tax rate versus corporate tax rate, and also in the extent of involvement with your local party. So I think we'll probably talk a little bit about that later on in the podcast, the extent of the participation of the local person. But private limited companies are the general modus operandi. The eligibility for that, a private limited company can be 100% owned by a party that is not Singaporean or Singaporean based. So that's key to know. So any one of the listeners who are not Singaporean and not permanent resident, you can be a 100% owner. No restrictions on that whatsoever. In terms of directorships, now there is a requirement locally that you must have at least one resident director. So this resident director has to be either a Singaporean or a permanent resident. If you have already gotten a work pass in Singapore and this work pass is tied to this particular company, then the person who has work pass with this company can also be considered a local resident. Does the local resident need to be a shareholder? No. Does the local resident director need to participate in the operations of the company? So with all the ongoing money laundering rules and such, the law has not made it compulsory for the local person to participate. But it is highly recommended, and the law is evolving, such where the local person does need to be kept informed of what is going on with the company's operations, so that this person can do their own due diligence to satisfy local compliance and also be satisfied that everything is running according to the law, because the law does hold all directors equal, whether you're local or whether you're foreign. The practice that I've observed this year, we are at the end of December now, but this year with evolving trends, is that in order to give the local person information that he or she needs to be satisfied of the running of the organization, everything is in order, is usually a view access to the company's bank accounts. View does not mean executive authority to act. It's just viewing only. So that's one way how you protect yourself and also protect the local person, just to make sure that that everyone's in the know of what's going on to suit local compliance requirements. But other than that, to be honest, companies limited by guarantee, these are mostly used by persons who are doing charity work. I do notice that there is an increased trend of philanthropy that's coming out of Australia, where Australians, either in their own names or in their trust names or such, they actually set up companies limited by guarantee in Singapore for the purpose of distributing wealth in a philanthropic manner. Whether that is done, whether the recipients of that would be in Singapore or overseas, that doesn't matter. The main thing is companies limited by guarantee are also subject to corporate tax in Singapore. So same thing with this structure, you can be 100% owned by a foreign entity or person, but you still need a local director.
Yeah. So Vijay, with all of the sort of options around, entities that you were just speaking about, what's the sort of timeline or process like to incorporate, those various entities? And is there a faster one? Is there one that particularly can be dragged out a little bit longer? What's your experience been there?
Yep. So my experience would be for the private limiteds, 95% of the time it's on the spot. If you have all the information, once you submit it online, if there is no issue, you would be asked to pay a fee online. Once they ask you to pay a fee online, it's as good as guaranteed that you get it on the spot. Like I was saying earlier, it's only if the system flags something, then they'll either ask you to make an amendment or they'll say, we need to route this by a physical officer. Then if it goes along that lines, then it could take a couple of weeks. I've seldom seen it drag more than 1 month. But in the rare occasion that it does go to a physical officer, a couple of weeks. For a company limited, and the same thing for an LLP as well. For a company limited by guarantee, that's a bit longer because all of CLG applications, they go through a physical officer. So that could take about a month or two. It could drag even further than that if the authorities want more disclosure on sources of wealth and funding. But that's on the company limited by guarantee side. The vast majority will go for private limited company, and 95% of the time it's on the spot.
No, that's great. And so when we are setting up these companies or various entities in Singapore, is there any sort of minimum like capital requirements or to start this? Like, is there a requirement that you have to have so much money or to satisfy, I suppose, the Singaporean tax authorities?
Right. So in terms of how much capital to declare and to put in the company at the beginning and during incorporation, there are actually three groups of people or three audiences that would be looking at this. One would obviously be the tax regulators. One would be ACRA, the authority that runs and manages schools registered and registrations. And the more interesting one would be the banks. So for the tax authority, they're actually not concerned from what I see. They don't look at capital mechanisms. The tax authorities are basically interested in whether the organization is doing anything of which then tax needs to be collected. So no issue on that from the tax authority. From ACRA's perspective, if we look at the Companies Act of Singapore and such, there is no minimum. The absolute minimum I have processed in my own professional career is $1. I've never seen anyone try to register a company less than $1. So you can take it easily, that's $1. No maximum limit, but of course, for a start versus later on, it's advisable not to start with too much and then just work your way up. And that is because you actually are required to demonstrate that this capital money is available and on hand. So, for example, it's easy to demonstrate that you have $1 in cash. If let's say you want to start a company with a paid up capital of $1 million on registration, you would have to demonstrate that $1 million in cash is readily available. So strategically, everybody or most people would start with a lower amount, not necessarily $1, maybe $1,000 or $2,000 or $5,000 or even $10,000, but not something that is difficult to prove that you don't have access to show that it is available. Now, the more interesting thing be the banks. So not just in Singapore, but I think all over the world now, there's a lot of due diligence that are required of the banks before they open any banking account. Banks would, in their own round of due diligence, want to know a lot more about who's opening an account. What's the background of this person? Where did the money for the capital come from? Now, of course, for me as a company secretary, I have to ask all these questions and document it as well. The banks, they would probably be exercising a higher level of due diligence on where money comes from when you put in share capital. So that and that has vis-a-vis to the type of activity that the company is going to do. So, for example, if let's say a very simple activity, like maybe, for example, opening a restaurant. So, opening a restaurant or a cafe in Singapore, if you were to show $1 as your capital to the bank would say, "How are we going to fund this?" And that might be a risk to the bank. So then it might be wise to show a higher amount of opening capital. Or you could always say that this is the plan, and then show the bank some evidence that the plan is going to be executed. Versus, let's say, if you're going to do a consulting business. So consulting business, in theory, does not need much startup capital because the main asset would be the person rendering the consulting service. So if you do $1 share capital to register a company and you want to do consulting business, it's not likely that the bank would ask too many questions. If they do, at the most it will be, do you have enough money to show us that you can go and rent an office or something like that, which is not capital intensive. So Jarrad, back to the original question, minimally, according to the law, it's $1 as capital to register a company. But some other parties might want you to show more. What most people do is they start with $1 and then they top it up as time goes by.
That makes sense. Now, Vijay, you mentioned a couple of requirements around having a local resident director. I know one of the questions we get asked time and time again is, if somebody, so an Australian expat is living, working here in Singapore for company ABC, and they get asked by their Aussie mate, "Hey, can you be my local director?" What are the rules around that? So they reside here, they have an employment pass tied to a company. Can they also be a director for that overseas company? Oh, sorry,
Correct.
for that Singapore
For
company.
that company. Yeah. So the local regulations are such whereby if you've got an expat that's already working in Singapore on an employment pass, so the rules and regulations around that is you are considered a resident person with regards to that particular company of which your employment pass is issued from. Let's call it company A. Then let's say one of your mates comes along and says, "I need to register a company B. Could you be my director in company B?" So the truth of the matter is, legally, the Ministry of Manpower would have to give consent to that. Now, is it currently tied up in the ACRA system? Now, let's say you have you have your identification number. If you input your identification number into ACRA's system, the current system does not actually link up immediately such that it will block a person from putting their name in as a director in company B. But you would actually be breaking the law in terms of being a director for B and A when Ministry of Manpower does not know or that has not given consent to that. So I would advise, if you are on an employment pass in Singapore, do not volunteer to be a director in your mate's company, because you would then be putting your employment pass at jeopardy. And if a person's employment pass is revoked or cancelled, we don't want to face those kind of consequences. Now, there are some kind of, there is a way out, there is an alternative way. So there are a couple of different passes that can be applied for. There is a pass called a One Pass, Overseas Network Enterprise Pass. So this pass, it's the highest form of pass that an expat can apply for. It does allow you to work for multiple companies. So your name can then go in as a local director to multiple companies. But there are other conditions that one needs to meet before being able to qualify for that One Pass. Now, if let's say you still want to help your mate, so then there is a process to apply on the Ministry of Manpower website for a secondary directorship. If you get that consent from the Ministry of Manpower for the secondary directorship, then it's all well and good. And that itself is another process with terms and conditions. Is it difficult? I'd say no, but you would have to demonstrate to the Ministry of Manpower that these are related in some way or other. If one is not able to do so, I would say just submit an application anyway. There's no harm in applying and say that this is This is not commercial in nature.
Mm.
And then let the authorities figure that out. So there is a way.
Okay. Very helpful. What about, obviously, one of the big things we all enjoy in Singapore is the relatively low tax rates. Could you step us through how, I guess, a couple of things, how the corporate tax rates are structured in Singapore? And then I guess, are there, incentives for new companies, existing, large, small? I guess maybe just a bit of an overview of what people might like to think about when it comes to tax.
Right. So the good news, well, most people think of it as good news, is that the headline corporate tax rate in Singapore is 17%, 17. It's been 17% for quite a number of years already. Does that look likely to change? At this point, no, although we never know what could happen in the future, but it's currently 17%. And this rate of 17% is flat across all kinds of entities, big, medium, small, what kind of makeup that your company is, what your company does, 17% flat. Now, there are some incentives at the lower end of the profitability scale. For newly registered companies, your first 3 tax years, your first $100,000 Singapore dollars of profit, you actually have the taxable income, you've got a 75% non-taxable element on that. And then the next $100,000 in profit, Sing dollars, you have 50% of that being exempted from tax. So what that means is, let's say in the first year of operations, you make 95,000 Sing dollars of profit. Well, 75% of that is exempted from tax calculation. So then the balance of that, the 25% of your 95,000, is subject to corporate tax at 17%. Let's say in your first year, you make $150,000 of taxable profit. Then the first $100,000, only 25% of that is taxed at 17%. And then the balance $50,000 in that bracket is 50% of that is subject to tax at 17%. And then anything more than $200,001 onwards, then it's a full 17% tax on that. After the third year, this incentive is pulled back a little bit. So the first 10,000 Singapore dollars of taxable profit, 75% is not taxable, exempted from tax. And then the next $190,000 in taxable profit, 50% of that is exempted from the tax calculations. And anything more than $200,001, then that's full 17%. So it's literally as simple and straightforward as that.
It's incredibly generous, isn't it? As I currently live here in Australia, and corporate tax in Australia is 30%. Basically from the first dollar. So it's incredibly generous, isn't it? Like it.
Yes. Oh, but I think I may need to qualify myself on one point there, because you mentioned from a Australian perspective. So this 17% split across the board. These exemptions on the lower rounds of profit up to $200,000. To be eligible for this, the companies cannot be involved in property development.
Okay.
That's one thing. The other thing is, the shareholders need to be individuals and not more than 20 individual persons, not entities. If you have entities as a shareholder, you still qualify, but you must have at least one physical person who has at least 10% of total shareholding. And then there's one more technicality, since we're at it. I think it's important for our viewers to know. If a company starts off with having losses, or along the way losses are incurred, these losses can actually, and other tax allowances, can be carried forward to offset future taxable profits. However, if there is a change in shareholding at any point in time, more than 50% of a share of the structure of the company changes, then you lose those tax assets. If you change the activities of the company, you also lose those tax assets. For example, let's say the same example as just now, if you're running a cafe and then you change to become a consultant, then it's a different business activity, you lose those tax assets. So as long as you're in the same line of work for the same kind of business, for the same kind of company, with at least 50% of your share structure not changing, you actually do get to keep those tax assets that you've accumulated over time. And what people generally do is, if they have their hands in doing different kinds of businesses, then they generally just have a different entity or different company for different kinds of businesses to just manage and keep all those tax assets in order, so you don't cross over, you don't unintentionally cross over losing out.
And what about like GST or that? Is what are the sort of requirements? Where is registration for GST essential, or is there any benefits or challenges, particularly around
We'll go-
GST?
Yeah. So GST can be viewed as something very simple, and also can be viewed as something quite complex if you go into the intricacies of it. I know Australia has quite a high GST. I think it's what, 10%, 11%?
10%.
Yeah. So Singapore recently has increased its GST up to 9%. GST is basically on almost all services in Singapore. Of course, it's not on residential property transactions, on international services, that kind of thing, but it's generally on everything else. Now, I just give you a very brief overview without going into the technicalities of GST. If a company, let's talk about compulsory registration first. That would be the easier thing to do. So if a company's revenue hits 1 million Singapore dollars within a calendar year, then GST registration is mandatory. It's compulsory. If an organization's revenue does not hit 1 million Singapore dollars in a year, GST registration is not compulsory, and you can continue about your business without registering for GST, and without you cannot collect GST. But that also means that you cannot claim back any GST that you've paid if you're not registered. Now, the registration process basically is that you put in an application to the income tax department, and this should be done before the company hits $1 million in revenue. Because if it already has hit $1 million in revenue, that would be breaking the law if we don't register. And at that point of registration, we would then be asked, or the applicant would then be asked to then pay GST backdated up to the point in time when they were supposed to have done so. So there's a financial risk there that you may lose out. The process is done entirely online. If you are registering voluntarily, then you would be asked to show evidence that the business is ongoing. You would be asked to upload your accounts. You would be asked to upload bank statements sometimes, maybe. Definitely, you would be asked to show business documents like invoices, contracts, and such, just to demonstrate to the tax department that you are legitimately doing a proper business, and justifying to them that you are going to hit $1 million in sales. Now, even if you don't, even if you're not going to hit $1 million in sales, what the authorities want to know is that you're genuinely doing business, and you need to prove that that is happening. Now, gathering these informations and all that, if you're already up and running, is not or should not be difficult. But people tend to get stuck with wanting to register GST when they just register their company, but their bank account is not up yet. Now, perhaps later we can talk a little bit more about the scene locally currently with regards to opening bank accounts. Now, one of the boxes that you need to tick in your GST registration is having an active bank account whereby a link can be set up for deductions and payments directly with the tax department. So if your organization is up and running, but your bank account is not up yet, then that could be a hindrance that could cause your GST registration to slow down. If you are registering because you have hit $1 million already, then the process will be much faster. Usually voluntary GST, I think 1 week, 2 weeks, at the most 3 weeks, if questions are asked, because that's all reviewed by a manual person. For mandatory GST registration, it goes on an express route. I would say within a few days, you would have a response from the income tax department, either approving it or asking questions. And then once they are clear and everybody's clear, then the registration is much, much faster. But bear in mind also, having that bank account up and running is very important because that's part of the checklist of things that need to be up and running and connected to the tax department.
That's great. So when we're talking, obviously, with the sort of tax, you talked a little bit about obviously the incentives and that low tax. Is there any, I suppose, other incentives or schemes like to that Singapore saying, right, do you want to come to Singapore, start a business, or is it just purely driven, like I suppose, from that sort of low taxation point? Is there any other benefits?
Well, to be honest, it's mostly driven from the taxation point of view, and also, in theory, the ease of doing business because Singapore is a very business-friendly place, and also generally the way of doing things in Singapore when you're dealing, whether it's with companies or whether it's with people and such, is generally we're a very straightforward society. So it's not complex, and because it's not complex and you don't have to go through layers and layers and layers of things, or you don't have to run around in circles. That is the main thing which attracts quite a fair amount of investment from outside of Singapore into Singapore. Now, there are other grants that are available to existing companies. The government-related grants, you can go to the Enterprise Singapore website. There are also grants that are listed over there. But one of the key things about government-issued grants are that they generally have a requirement that certain percentage of ownership or shareholding needs to be local. Seen some cases, I've seen a lot of cases where at least 30% needs to be locally owned. There are a lot of other exceptions to it, but I would recommend to our listeners, if you want something from the government does have some interesting grants. Check it out on the Enterprise Singapore website.
Brilliant. Very helpful. Vijay, I mean, I guess just taking a turn back to some of the, I guess, more boring paperwork side of incorporation in Singapore, compliance, audits, annual reports, what's needed, what does it cost, how often, who do people talk to get this stuff done?
Right. So quite a bit of it. So what's regulated in Singapore is the deliverable product that needs to be submitted to the authorities. What's not regulated is the pricing mechanism and who does it. So for example, one very common thing is everybody needs to submit their corporate tax returns. So in Singapore, either the company themselves, if they have the expertise, could submit it themselves. It can be as simple as that, and there's no cost involved. Or there are other common groups of people who do provide the service of doing it. Like for example, company secretaries like myself. There are licensed tax agents. There are accounting firms. There are audit firms. So all these different groups of people could offer similar services. And it's important for our viewers to note that the costing of all of this is actually not regulated. So you could very well find yourself in a situation where you get a quotation from one party that is costing maybe as low as $200 or $300 for something, and then you might get a quotation from another party that costs maybe $1,000, $2,000, $5,000 for something, quite literally. So that's where the corporate services sector in Singapore are, I would say, it is important for a person to shop around and to gain confidence with who your service provider is. Now, even though the authorities locally have made it simpler and easier process for a company to do their yearly submissions, whether that's to the tax department, whether that's to ACRA, whether it's accounting requirements, whether it's audit requirements. Truth be told, it would be very, very a safe bet to either use somebody that you know personally already or get a trusted referral from someone who already has a trusted person. And that is only because the market is very, very wide. I will not say anything about the level of service that my professional colleagues in the industry give. But what I will say is, just because a service provider gives you an expensive quotation doesn't mean that you get a good and proper and reasonable job done. And at the same time, just because a service provider may give a very, very low, extremely low, too good to be true, cheaper than ice cream quotation, doesn't necessarily mean that the job will get done properly. So my first advice to our listeners would be, I'm sure if you come to Singapore and you want to do something, you would be doing it because you already know someone who is here ahead of you. And speak to those who are already ahead of you, who have already gotten their feet wet, and get their inputs, to be honest. The second thing would be, if you're not able to gain enough confidence in the referrals that are provided to you, shop around. And don't choose the first person or the first service provider that you get a quotation from. See at least 2 or 3, preferably at least 3, so that you have a better idea of things and make your decision from there, whom should serve you in what capacity. In terms of, now here's a very simple, dry stuff. 2 main areas of compliance that companies in Singapore need to adhere to. You'd have yearly reporting to the income tax department. So if you are a LLP, you only need to do once a year, and that's in April for your calendar year, the previous calendar year. If you're a company, you have 2 reporting deadlines. One is within 3 months of the end of your financial year, which I think in Australia, all financial years are the same, right? Is it 1st July to 30th June? So in Singapore, it's not. You can choose your financial year. If you end your year in May, or if you end your year in October, no matter when you end your year, within 3 months of that date, you need to give an estimate of your chargeable income to the tax authorities. And they would then issue a tax assessment based on the estimate that you have given. Then, every year by the 30th of November of the next year, you need to submit your final tax return. And your final tax return, if it is different from what you've given in your estimate, then you will be assessed to pay the difference to the income tax department, or they may refund you if you've overpaid in the first place. It's important to note that the earlier you submit your estimate, you ask the income tax department for an installment plan. That information is available on their website, and that should be, that's preferable for cash flow. When you do your final tax submission by 30th November of the next year, then whatever that needs to be paid in one shot when the tax assessment comes. So in summary, most people would do a company 2 submissions every year, estimate within 3 months of the year end, final before 30th November the next year. Now, ACRA, companies that related submissions, the key general date to remember is 6 months from the end of your financial year. So within 6 months, by that cutoff of 6 months, irregardless of when your financial year is, you need to, if you are having your financial statements audited by a CPA firm, that has to be done by then. And you need to have your annual general meeting of your shareholders before that 6-month cutoff. And you need to do your submissions accordingly to ACRA also within that 6-month deadline. Other than that, to be honest, for ACRA-related things, if there's any changes to your company's structure or profile, within 2 weeks, you need to update the authorities. Otherwise, there'll be late penalties. And if one is late in their 6-month cut-off thing, then there are fines and penalties there. But the easiest thing I would recommend for everyone to remember is 6 months, within 6 months of your year end, all your submissions need to be in place. It's simple.
That makes sense. And I mean, I guess for those who may be looking to come over and hire your payroll, CPF, we don't need to go into the percentages, but I guess what do people need to think about? How do they check, how much they have to pay someone? When do they have to pay CPF? Is that just for any Singaporean employee? What do people need to think about on that side?
Okay. So generally two kinds of employees, I would say, the locals and the non-locals. So in Singapore, you would be covered under the Employment Act if the salary of the person is 4,500 Singapore dollars and below. So everything that's covered under there can be easily found on the Ministry of Manpower's website. If your salary is above 4,500 Singapore dollars, you're not really covered by the Employment Act. But certain things still fall into place. For example, medical leave, hospitalization leave, maternity and paternity benefits. These do come into play. There are differences between local employees and non-local employees. For all of that, these can be very easily Googled on the government websites. Information is easily available. So one just needs to be aware that CPF is payable to Singaporeans and Singaporean permanent residents. So if you're not one of these two categories of people, there is no CPF component in place. The CPF percentages and rates, they vary according to age group. Generally, if a person is 50 years old and below, that percentage is rather fixed. If a person is above 50 years old, there are different categories of contribution rates. It should be that can be Googled very easily from the CPF website. CPF by right needs to be paid before the end of the month, of that particular month, just like salaries. Now, if you're covered under the Employment Act, then the Employment Act, I believe, says something about you can pay up to the 7th of the next month. But market practice is within the month itself to settle whatever that needs to be settled as far as salary is concerned. The CPF, you could, technically speaking, submit up to the 14th of the next month without incurring any fines or penalties. There is that concession there. If a company or an employer submits late, then penalties come into place and you risk your employees lodging complaints with the authorities, which then becomes a bit of a hassle to deal with. And of course, penalties are involved. So the main thing is CPF is compulsory for Singaporeans and permanent residents, not compulsory. And actually, there's no mechanism for non-locals to contribute that. Now, something, Jarrad, that you did not ask, but is kind of a hot trend now is health and medical insurance for expats. Because we don't so the general market practice is we don't really have defined plans for these. But the general trend is that an expat that would be coming to Singapore, whether from Australia or elsewhere, because of the high cost of medical care locally, it is advisable and becoming more of a commonplace where medical insurance for the expat and his immediate family is part of that package of the expat package, so to speak. What is good and what is not good? Well, basically, basic hospitalization insurance should be inside there. There are specialized service providers who specialize in this kind of insurances. It's different from just going online to the general insurance companies and just buying, like, for example, travel insurance or car insurance, which is a standard thing. You go online and then you just click a few buttons and then they give you a quote. If you are setting up a company or if you are an existing company and you have expats on your payroll, you should speak to a professional who deals with these kind of things. And same thing like what I was saying earlier, because the market is not regulated, either go to a trusted source, or if not, if you're not satisfied with what you've been referred to, shop around. Please do shop around.
Just sort of throwing back to sort of the setup of, getting your company off the ground in Singapore. What's sort of the process for opening a corporate bank account in Singapore? And is there, I suppose, any particular challenges that, for example, a non-Singaporean citizen or PR might face? So, fresh into Singapore on a new employment pass, what's the process going to look like for them?
Yeah, so Joel, this is the hot topic at the moment for companies registering in Singapore. Really, really the hot topic, because the regulations and the trends they just keep moving. So first thing is, for locals, it's not an issue because locals are present in Singapore. So to get things up and running is easier. The moment you have someone who is not a local in play, either as a director or a shareholder or someone who is going to be a signatory of a bank account. First thing to take note is you will need to do a trip physically to Singapore. So it is common for people outside of Singapore to register companies when the main person being of non-local is outside of Singapore. But for banks, currently there are some banks who say that they can do it virtually, which means by video call. But majority of the banks in Singapore require a physical presence in Singapore at their designated branch to do account opening. So that's the first thing. If you're overseas, you should plan a trip physically to Singapore. Next, these days, you can no longer walk into any bank branch and put up your hand and say, I want to apply for a bank account, a corporate bank account. It doesn't work like that anymore. One has to actually make an appointment without getting into bank specifics, just being general. You generally have to make an appointment. Either you give information online beforehand or at that appointment, then you give the information at that appointment itself. Now, they've streamlined most of the banks down whereby not every branch has this facility where you can go and open an account with. So that appointment making process, which you do through the bank's website, will then usually give you a few branches to choose from, when is the available dates and such. You generally be lucky if you can get something that is at least 3, 4, 5 days away. Usually it's a week, 2 weeks away. Now, when you do get to the bank, the general thing, which is the common practice now, is apart from the obvious things like identifying who the beneficial owners are, conferring ID documents, and such. One thing is, I was saying just now, proving source of wealth. So all banks now, they want you to declare what is the source of wealth of the company. They also may ask for evidence. So in some cases, just a verbal saying, this is my own money, or this is accumulated from working in this other company for so long. Here's my income tax, which shows I've got this. It is reasonable for me to have these savings. These kind of things would not generally require additional documents. But it's becoming more commonplace for banks to require shareholders or business owners or company directors to demonstrate and show with documentation where and how the wealth of the company or the capital of the company came from. That's the first thing. Second thing is proof of intention to do transactions. So this is actually even more basic as compared to GST registration, where the tax department may ask for proof. The GST department may ask for things like invoices and such. But when you're at the very beginning, absolute beginning of the process, you just register your company, your next thing is to register the bank account. The banks would want to see evidence of an impending business transaction. So that could be in the form of, you need to be prepared to disclose emails or letters of intent, memorandums of understandings, even to just show proof that you are firstly a real company and the people you intend to deal with are real. Now, most banks now, in fact, all banks are very internet banking heavy. They're moving away from things like physical checks and all of that. Banks in Singapore still generally have two modes of electronic banking, either with a physical token or with a non-physical token with your phone or something. Now, all this setup, getting the tokens to you, getting a bank account approved, all of that takes a while, to be honest. So even with locals involved, it takes a while. When I say a while, I have seen shorter applications take about a month, plus minus, average 2 months, sometimes 3 months. Now, why does it take so long? Firstly, the back-end process that's required by the regulators in Singapore require quite stringent checks to be done. So that means that what you should be expecting is you would go to the bank for your interview or your appointment. You would give them all the information that they want. Quite likely, you may not have on you at that point in time specific documents or info that they want. Then you'd probably have to email them later. So that takes you time to go back to the office or to home, gather information, give it to the banker. Then the bankers, they need to be satisfied before they give it to another department. And then internally within the bank, it goes through a lot of different departments before an approval comes. Be mentally ready that things can go quiet for a week, 2 weeks, 3 weeks. and then suddenly questions come. This is a commonplace now, and that's because people at the front end may not have questions, or people at the back end may have questions, and then it filters all the way down back to you. So all this comes into play. The time taken, let's say 2 months on average, is per bank. Now, how then do you, because let's say you really want to start business and you have impending transactions that you need a bank account to get running quickly. So the first thing is, obviously, don't put all the eggs in one basket. If you need to come to Singapore to open a bank account, why not see 2 or 3 different banks at the same time? Because the different banks have their different processes. So be mentally ready to attempt to open more than one bank account, just in the matter that one application from one bank A, may get approved before bank B or bank C. That's the first thing. Second thing is payment gateway services. So in Singapore, I'm sure all over the world as well, you have the rise of electronic banks where they don't have a physical branch. Common ones in Singapore would be like Aspire, Wise, TransferWise. There are quite a few of them in the market. Now, opening a bank account with a non-traditional bank, with an electronic bank, requires also an online submission of documents, may or may not involve a video call, but they will ask the same questions, and generally is, I wouldn't say faster, but I will say not as complex. So then a good strategy, in my personal opinion, would be have a traditional bank account, have an electronic payment gateway account as well. Generally, the transaction rates and all of this that the electronic banks charge is less. But then again, if you have an issue and you need to see an officer, electronic bank will send you a chatbot, or you speak to someone online, as compared to being able to go to a physical bank. So that one is, I don't have a recommendation on that, but I think it's good to have at least minimum one of each. They do take time. So if you have an urgent and immediate transaction that you need to do, have to find an alternative way to do that.
Yeah, it's a good point. While we're sort of just touching on, obviously, any sort of challenges, more or less, would you say that there's any sort of unique challenges that, excluding obviously banks, that, for example, Australians might face when starting a business in Singapore?
Unique challenges. So that's interesting, because Singapore has tried to make it as streamlined as possible. Off the top of my head, I don't think I can think of any unique specifically something that's uniquely challenging that expats from elsewhere, other than Australia, would face. Everybody would be facing the same thing. The main thing would be not the registration of a company, but the time that it takes to get a bank account up and running. I think that is the key challenge, because it's not in our hands and we don't have any control over how long that process takes. Everything else actually can be planned for.
Yeah.
Literally, everything else can be planned for. How long it takes to open an account, can't really plan for that.
That makes a lot of sense. I guess, Vijay, I mean, a few other questions, and gosh, I mean, we could talk about various case studies, but I guess, what are from running the company, setting up the company, what are some of the, I guess, common compliance pitfalls or errors, mistakes, oversights that you see Aussie expats or anyone, I guess, making when they're running a company or establishing a company in Singapore?
Well, I'd say in Singapore, not anything that is unique to running a business elsewhere. The main thing would be, if you're not from Singapore and you want to do things in Singapore and you're doing things for the first time, there'd be unknowns that you don't know. So my advice to our listeners would be, it would be good to lean on the knowledge of someone who is experienced in owning and running a business in Singapore, so that you have someone to tap on just for knowledge, and perhaps journeying together in the earlier parts, in the young stages of your entity's running, until maybe 2 or 3 years later when things are stable. If you are whether you're Australian or whether you're from anywhere else, it would be advisable to find a service provider that a consultant service provider that can journey with you. If you're looking for someone transactional, then you would probably come into a situation where you may run afoul of the law without knowing that you run afoul of the law until a notice comes to you that says you've committed an offense. Also, it's good to have a trustful relationship with somebody local. Yeah, because when I say service provider previously versus someone who is local, there are foreign-based entities who set up companies in Singapore to provide corporate services. The staff and the people of these kind of service providers did not necessarily be local themselves. So so their exposure, their experience, it all depends on basically who's journeying with you. And wherever you go, whether it comes to doing business or even if you're an expat relocating to Singapore for the first time or such, your community is very important. Your social safety net is very important. So as I'm sure everybody knows that you have your own personal social safety net when it comes to your friends and your family, and when you relocate in or out, it's good to have a social safety net, a community net. When it comes to doing business, truth be told, forming the people who are your safety net in business is also actually important. So having a service provider that, you can't expect the person to drop everything the moment you call, but having a service provider who is generally helpful and generally wants you to succeed is a service provider that you should choose. That's the first. Second thing is, get to know other people in the business in your community, whether it be from the same industry or other industries, because it's always good to benchmark your information against other people's advice and other people's experiences. That would be my take.
Yeah, very, very good advice, I think. What about, I guess time in Singapore is done, time to go home. Now, I guess one of two things is going to happen. Either I'm going to keep that company running in Singapore or I'm going to shut it down. Could you maybe just walk us through, without going into the granular detail, are those two actual options that I have at my disposal? And if so, what would be required under either scenario?
Right. So if you want to keep your company running, either it runs with operations running or it goes into becoming a dormant company. And then you keep it for further use, or let's say relocate next time again or something like that. So if the company is active or dormant, you still need minimally your local director to be in place. Some local directors, so we didn't talk about this before, so sidetrack a little bit. Local directors in Singapore, generally there are three kinds. One would be your mate or your friend or your family member. So your mate or friend or family member may work out some form of friendly arrangement with you in order for them to be a director to fulfill local compliance. So then your service provider who helps you with compliance will then have communication with that person to do signing of documents and such. Second group of people would be people who have a corporate services provider's license, or the secretarial companies and such. They either themselves have their own staff, which they would offer the services of their staff as a local director, or they would be in the business of finding a local director for the company. So then the fees and the scale of that, there are market rates involved, because if you use a person who has a license from the authorities, that the fee would generally be higher. Some ask for a deposit, some just want a yearly fee, some want a 6 monthly fee and such. So that's the other extreme end. You have friendly, you have structured, and then you have anybody who's in between. So anybody who's in between would be basically anyone who fits the requirements of a local director who is not necessarily licensed or holds any license. They may do it for a living. They have 40, 50 companies of which they sit on as a director. They just charge a fee. Or they may have like 5 or 10. So the options are very wide. When you want to set up your company or when you want to close it down, maintaining the local person is important for local compliance. So you would still need to engage that local person to make sure that that person is around, and the submissions yearly are done accordingly to IRAS and to ACRA. Now, if the company is active, then you just have to make sure that activities run and the law is not broken and all compliance is met. If you choose to have the company dormant, well, you have less things to do, but you still need to do minimally 3 things. Number 1 is have your local director in place, comply with income tax department. The income tax department, you can notify them that you're going dormant, and you can apply for a waiver of tax return. So if you apply for a waiver of tax return and it's granted, then you don't need to submit any tax returns until you become active again or until the company is struck off. For ACRA, that requirement, if you're dormant, still runs every year. Still need to have AGM, still need to submit documents and such. Now, if let's say you want to close the company down and strike it off, you would basically wind up your operations, let your staff move on, and then the final 2 things would be you'd have to submit tax and ask for tax clearance. Now, tax clearance is a general term. Basically, what it means is you submit your corporate tax returns up to date, you inform the income tax department that you intend to close down, ask them to generate a form for you where you submit all the information up to the date of closing, submit that, settle tax, and then after that, once that's done, have your extraordinary general meeting among your shareholders to resolve to close the company down, submit it, and then that's it. Now, when you submit an application to strike off the company to ACRA, it takes your job is done once the application is accepted and approved. Now, on the back end, ACRA will then take about 3 to 4 months to process it until it's fully closed. That 3 to 4 months, you don't have to do anything. The authorities will do their own part where they have to advertise on the government gazette and give people an opportunity to object. They need to inform the necessary departments and such. 3 to 4 months for them to do that. But essentially, once you have submitted your application and it's accepted, your job is done. If an objection is received, though, so let's say the government is doing their part to advertise and notify, and somebody lodges an objection to your wanting to strike off, then you need to satisfy that objection. Because the only person who can withdraw an objection is the person who puts that objection in themselves. Let's say, for example, I object to somebody who is trying to strike off, and I put in the reason that money is owing to me. Technically speaking, the only person who can then withdraw that objection is me. Nobody can force me to take it off. Now, the consequence of that, if an objection comes, is you would then, the company would still be considered a live company and is still subject to reporting requirements. So that's something very important to know in hand. Make sure nobody objects. And then finally, at the end of the process, another letter will come to say company is closed. So that's basically the procedure.
Very clear.
Vijay, it's been obviously really insightful, even just for me, just learning about this stuff. So it's, I suppose in conclusion of our questions, it would be great just to get your sort of hot tips about, what is sort of the key advice that you would give to anyone coming to Singapore, starting up a company, and obviously to ensure the long-term success of that company.
Right. So the first thing is do your maths to make sure that this is going to make money, obviously. Second thing is, do bear in mind that what works in country A need not necessarily work in country B. Even if it's something as simple as, use the example of running a cafe just now. So opening and running a cafe in Australia is different from doing that in Singapore. It's different from doing that in maybe Thailand or in India or in China or Japan. So I would say do your research, do your market surveys, make sure you are confident that what you're going to do is going to work. And in order to get that confidence, I think, of course, apart from doing your technical studies, speak to people on the ground to get their opinion as to whether what plan you have sounds like it's going to work. That would be the first thing. Something that I think more importantly is never, never, never do something alone. The people that journey with you, they're very important. have your safety net there in terms of a trusted group of people to not just journey with you, but to advise you. Some people's journey is not the whole from start to end, but the people that you surround yourself with when you make key and critical decisions in your business, as with your personal life as well, is very important. So look for the right people to journey with you every step of the way if you're venturing into something new and if you're venturing into uncharted waters that you have not been in before. Always remember, there's always been someone who's been down the road before you. It's a matter of being that person or that persons and getting perspective and being grounded when you plan and when you want to execute what you want to execute. Never do something just on the whiff of doing something or starting any business in Singapore or anywhere else just because it sounds like a good idea. One thing maybe for our Australian viewers, whenever I go to Australia, I find, and this is just very general stereotype, lots of decisions get made either at the pub or over a drink. While that's a good idea, always make sure that you have some grounded advice before you do that.
So don't register the company whilst at the pub is what you're saying.
Yeah, the Australian way of doing things.
Yes. Who you journey with, who you seek advice and counsel from is important. It takes a village to raise a child. It also takes a village to raise a business, to be honest. Find your supporters and keep your supporters close. Never make a decision on your own alone.
That's great. Look, I think we'll wrap it up there. Again, thank you, Vijay. This has been such a very insightful session, and I just wanted to thank you so much for your time.
Most welcome, gentlemen. Happy to share whatever that I can.
No, wonderful. And if obviously if anyone has any questions for Vijay, you'll find his contact details in the notes. So reach out with all the tough questions. If you are having that drink at the pub and thinking, gee, what are we doing running a business in Australia when the tax rate sounds so much more attractive in Singapore? Reach out to Vijay, reach out to a few people, get advice before you jump on that plane to register that company. But as Joel said, Vijay, huge thank you. Really appreciate your time. I'm sure everyone's going to get a lot of value out of this, and I'm sure we'll be in touch very soon.
Very good. Thank you, everyone.
So as we talked about in the sort of first episode when we launched Money Side Up, we'll be releasing one of these podcast episodes each month on the last Wednesday of each month. So it would be really great if you could follow along and listen to our story. And if you've got any topics that you'd like to hear us speak about, please let us know and get in our comments. Contact us on LinkedIn, any other methods. We'll be interviewing experts each month on topics ranging from repatriating funds to Australia, preparing wills overseas, taxes, you name it. So this podcast is being aired on all major podcast services. So you'll be able to find us, subscribe, check out any resources that we are creating as part of the podcast, and of course, leave us with your questions.
Wonderful. Thank you, Joel. And of course, if this is of value, you are finding value, you're enjoying listening to Joel, to myself, to our other hosts, do leave us a review. We'd obviously love to hear from you. Tell someone how you've heard about us, however that may have been. We don't advertise this podcast. We're not here to sell anything. So if you've gotten value, we'd certainly be grateful if you can share this, spread the word, and hopefully demystify the world of personal finance for another Australian, wherever they may be, all over the world. But as Joel said, thank you very much for tuning in. Do check us out on all the social channels. We're at Money Side Up, which is our user handle across those channels. Got a great speaker lined up next week. So do stay tuned, but do remember to like, subscribe, leave us with your 5-star review. Would be great, very grateful. But on behalf of the entire Money Side Up podcast team, wishing everyone a fantastic year ahead.
Thanks so much for tuning in.